All right, I think we have a lot of people joined us. Thank you everyone for joining us today for the webinar. I am Muskan. I'm part of the growth team here at Vimo. To get started, I'll just quickly tell you all a little bit about Vimo if you don't know us. Vimo basically operates in the sales enablement acceleration space, and we help financial enterprises across the globe improve their sales processes, partner relations, and engagement. We've worked with almost 60 plus financial enterprises like ICICI, HDFC, Mahindra Home Finance, FE Credit in Vietnam, and Berkshire Hathaway in the US. Moving along, just to give you a little bit of context on the topic today, we have seen a lot of disruption in the lending space due to COVID and the economic uncertainties that COVID caused. And we know there is an actual need of understanding automation in the lending space and why digitization is so important today. So to cover all of this, we have Shantanu Rege. Shantanu is currently the Chief Operating Officer at Mahindra Home Finance, a unique housing finance company incubated with the broader Mahindra Group. He is also an alumnus from Harvard, and he's been with the Mahindra Group for almost 10 years now. Along with Shantanu, we have Varun. Varun is the VP of Product Marketing and GTM at Vimo. As a part of this role, he leads industry initiatives where we communicate with stakeholders from the community to enable knowledge sharing and networking among peers. Just before we start the webinar, I want to let all of you know that if you have any questions at all, you can put it up in the question and answer space, and I'll put it across to Varun and Shantanu, and all your questions will be answered at this session itself. And if the video or audio is not clear at any point of time, just put it in the chat section and we'll try our best to fix all the technical glitches. All right, I'll let Varun and Shantanu go over with the discussion now.
Sounds good. Thank you so much, Mishkan. And so thank you, Shantanu, for joining. I'm looking forward to this conversation. What we would like to do is, of course, to start with a slightly broader lens and take a look at the industry as a whole and the direction in which it's moving, and then start to bring the focus down to the transformation that you are yourself driving at Mahindra Rural Housing Finance. So let me take a longer sort of position, and I'd like to get your thoughts on how you see the lending space in general in India, and in particular, the nuances between traditional banks and the NBFCs. And then we will go a further step down and look at how that applies in the rural sort of lending space and the particular challenges and opportunities there. But more broadly, how do you see the industry moving? What are the driving factors in the NBFC space, and how does that sort of differentiate from what's happening in the broader banking space, Shantanu?
Thanks so much, Varun. Pleasure to be here. Banking or finance as an industry has always existed, and I think organized financial services is more of an urban phenomenon, or started more in the urban context. You've always had, the village money lender, etc., extracting usurious amounts of money. And I think over a period of time, this is kind of going back into history, but over a period of time, banks, as the economy gets more formalized, banks start to have an increasing role. And India, I think most economies, especially developing economies, are credit starved or supply constrained rather than demand constrained. There are entrepreneurs across the country who want to do something, and you need credit to kind of get the initial capital to kind of start off on that. To my mind, banks and the proliferation of the banking sector into the economy kind of supplies base load, right? In the sense, if you draw the analogy with the power sector, there is a certain amount of demand which is always there as in the formal economy. And banks are very well suited to cater to large clients, institutional clients, corporates, SMEs, etc. But as the economy goes through its cycles, right? To me, the peak load, or the difference between base load and peak load, is kind of the segment where NBFCs play a role, which is why NBFCs, the business model itself, tends to be a little more volatile as compared to the banks. So when economies are growing, expanding, growth rate is high, you will see a lot of private sector participation in the financial services sector, NBFC licenses being given out. And it actually reverses also equally fast. So when things start contracting, risk in the economy becomes high, banks turn into risk-off mode, etc. Then the capital available to NBFCs, HFCs, etc., becomes constrained, and not too many NBFCs have reached a scale where they can survive or can draw on other pools of capital outside the banking sector. And that is why there is a contraction in the number of NBFCs or lending itself. So given that there is a reason for NBFCs and banks to coexist, right? Banks aren't always the most nimble when it comes to responding to retail consumer requirements or demands, right? Be it regulatory arbitrage, be it the speed of decision making, technological enhancements in terms of the process and customer service, etc. NBFCs usually or should have, a leg up on banks, just because of legacy systems available within the banks, which take a lot of time to change, right? And therefore, there will always be a space for NBFCs to kind of coexist along with banks to kind of address, especially in a growing economy, right? Which will take care of peak load, and there will always be a higher risk appetite within NBFCs as compared to banks. And yes, risk, like everything else, goes through its cycle. So at some point of time, NBFCs as a sector will end up taking on more risk than what the system can support. And that is when, de-risking begins within the economy, and NBFCs, start doing risk on, etc., and those have ripple effects throughout the economy. So that's how I kind of see it. Regulator has a role to play in deciding what amount of systemic risk they are comfortable with, and therefore they are willing to support growth in the economy and therefore growth in NBFC lending. But you're already seeing, large NBFCs kind of have become too big to fail, almost like banks. And so the regulation for larger NBFCs will start coalescing to that of the banks. So obviously a regulator wouldn't want large NBFCs to take the same kind of risks which, let us say, a smaller NBFC can take. And I think slowly coming around to appreciating that perspective as well.
Right. Yeah, so I think that's a great perspective. And then also, given the fact that, like you said, it's the NBFCs that are catering to the variable sort of demand, which might be the sort of border cases or the sort of things which have been sort of left out of the traditional financing and the banks. That means that you will also, because you will be taking on higher risk with the potential of higher reward, of course, but then you also need to be much more systematic in the way you sort of make your lending decisions, right, to sort of offset that risk. And we'll get to some of those down the line, but I'm just wondering, so the need for more data-informed sort of lending decisions is as much, if not more, in the NBFCs as it is in the traditional banks, it seems to be. Is that fair to say?
So absolutely. NBFCs as a category will tend to take on more risk than the banking sector will want to take, and will therefore, traditional finances, the more risk you take, you have the potential of more reward. The question is, what is the reward that you're looking for, right? Yeah. A traditional organization like mine or would say that reward is profits, right? Some others might say reward is valuation, right? It might come at the cost of profits, but that's the kind of space that we are in. But yes, higher risk should translate into higher rewards. And I think classical economics says higher reward should be profit. So we tend to be a profit-oriented organization, not so much a valuation-oriented organization. Right. But as you come towards profits and you start wanting to capture profit pools, it leads to another interesting dilemma, especially when you're trying to combine profit pools with technology, right? Because the technology dissipation within our country is still very much an urban phenomena. Yes, I do agree that, with the proliferation of UPI, etc., there's a lot of buying even in rural, semi-urban geographies. But still, expecting consumers to take loans, the number of consumers who will take credit products, right? In a purely digital format, which is where a lot of fintechs are kind of focused and wanting to exploit that opportunity. To my mind, that comfort in deep rural is probably not there, right? So, and the urban prime customer, if you will, right? People like you and me, salaried, maintaining, good banking transactions, etc. I don't think we provide a very good source of profit pools for the financial services sector, right? You and I will have every bank and NBFC wanting to offer us home loans and personal loans at very attractive rates. And to my mind, that is more a valuation or, the opportunity to, in the future, upsell or cross-sell some product, which is why that is happening. The potential and the feasibility of that is yet to be seen. There are some examples or some companies which have done it exceptionally well, Bajaj being an example, but whether everyone will be able to replicate that model, time will tell, right? But from the customer acquisition standpoint, whether that customer is going to give you profits in urban India, the prime customer, I'm not so sure, right? And which is why it leads to an interesting conversation. Okay, so is the reason for banks or NBFCs moving more into affordable housing, semi-urban India, the Bharat segment, is it more driven out of a regulatory push? Because for a long time, RBI used to push banks and say you have to open rural branches, right? But today, I think it is more in the search for yields, right? More in the search for NIMs, because that is where large profit pools are available. In the village, you will still have the local sahukar who, the money lender who is lending money and making a fair amount of profit. Is that a customer segment that can be served by organized formal banking sector or NBFCs? That is the key question. And obviously technology has a role to play there. But to what extent, those are the questions that all of us are grappling.
Right. So I think even if we did not have the regulatory push, it's quite likely that some of these traditional sort of lenders will move to these unserved places like rural India, etc., because it just makes business sense. And going back to what you said about the urban markets being more mature and more competitive to the extent that it's a squeeze on profits. And so we have so many options in front of us. It becomes very hard. If you do want to sort of grow your profits, it becomes, you do need to go and sort of set camp in rural India, I think, and sort of which brings us to you and to Mahindra Rural Housing Finance. So I'd love to touch upon that aspect of it. Because we speak a lot to other banks, and mostly the conversation around the trends that we're observing in the marketplace and so on, the customer dynamics, it tends to be around the urban and sort of new age digital savvy customer, etc. But now, so it's a great opportunity to talk about a new type of customer. So what is your view on how rural India is sort of progressing in terms of a credit market? And what do you see as the opportunity for the next 10, 20 years? I know it's a broad statement, but I would love to sort of get your perspective on that.
Sure, I often say this, just like for empires, Afghanistan is often called the graveyard of empires, right?
Yeah.
So to that extent, very often rural India can be the graveyard for financiers, right? Because there is a lot of pent-up demand, yearning for credit, but a risk-adjusted method of providing that credit, and more importantly, of ensuring collections, is something that hasn't yet been figured out for the large opportunity, right? Even in rural India, you will have the salaried customer, etc., where it is easier to take a credit decision, right? But let's say a farmer, right, who wants to set up, go down to store, his harvest, right, and sell it when the prices, he sees a pickup in prices. Is that customer being served? There is a demand, there is a business case for it, but uh, analyzing his cash flows and deciding how to price the risk is something which is a major problem, and which is yet to be solved, to my mind. Combined with that, I think there is an attitudinal difference, and maybe it will change over a period of time. But there is certainly what I see an attitudinal difference between, let's say, the tech-savvy urban customer and your run-of-the-mill rural customer, which is like most things, they do a lot of their transactions based on trust, right? They sell to the supply chain for harvest because next year they know he's going to give you credit, which is why at farm gate itself I will sell my harvest to that person, and that is a trust which has been developed over time. And trust, unfortunately, is the one commodity which money can't buy, right? For everything else, there's MasterCard, but for trust, you need to be there in the market, demonstrate that you are willing to partner with that consumer over long periods of time for you to be able to earn their trust, right? Be through the ups and downs of cycles as well. And the money lender has been there because he establishes that trust by staying in that same village. Most other financiers for rural India have not been able to establish that trust for the large customer segment, which is why rural India tends to be credit starved. There have been problems of rural consumers also. Politicians have, to some extent spoiled it by, offering farm loan waivers and, therefore muddling up the issue wherein the consumer feels that whether the loan is for farm or for some productive use, vehicle or home, end of the day, maybe it will get waived, etc. So those are challenges that, a rural lender has to deal with. But to my mind, I think technology is secondary. To the extent technology can help you get channel distribution, speed of processing, all of these which are very important in the urban context, obviously to some extent apply in the rural context as well. But the primary differentiator or the biggest challenge that one needs to solve is how do you earn the trust of the rural consumer and convince him that you will be there to support him, through the ups and downs of business cycles, of economic cycles, of actually harvest cycles, right? And if you start being too punitive when it comes to, a bad harvest, a situational default, if you will, because there is a drought or there is excess rain and therefore his cash flows are genuinely impacted, do you partner with him or do you say, no, my policy says, at 30 DPDs, I possess your house, I recall my loan, etc. You have to tailor your products and your services to the consumer, understanding his genuine problems as well. And that's not easy given that the regulations apply uniformly, irrespective of whether you're a rural lender or an urban lender.
Yeah, fascinating. And I think, so with the fact that you need to build on the trust also comes the fact that you need to educate them on the options available, what it means, and the sort of the whole, just educate them on their lending options. And it becomes more challenging because, so we're looking at rural India across the country. You might have local sort of cultural nuances, languages are different, etc. And they might not be aware of the options, that they have and what the payback terms are, etc. So is that a challenge as well that you will have to deal with in terms of making sure that they're prepared and aware of what are the options they have in front of them?
Absolutely. And, you have to speak their language. And when I say language, it's not just, the dialect or Tamil, Malayalam, Kannada, but, rural India, and this was news to me because I've been an urban boy myself, but in most of rural India, the concept of interest rate, amortization, etc. doesn't exist, right? So the language that they speak is, 5 rupees sekda, which means, it is a 5% per month interest only loan, right? Okay. And then you have to say, okay, equivalent to that, I have a product and us being a lender, we amortize, etc. But 5 rupees interest only loan translates into something in excess, almost close to 100%, rate of interest, right? If you take it an amortizing kind of loan, or you look at IRR. So comparing that and explaining to them that your product is more like a 1 rupee sakda kind of product, right? Is the innovation or is the communication challenge that you have to grapple with. There are every state will have its own nuances, especially when it comes to housing. It is not just a personal loan, but there is a mortgage process also involved, wherein land records, mutation of title, all of these become issues that one has to grapple with. Am I still audible?
Yes, you are now, Shantanu. Okay. But your screen seems to have frozen.
Okay, let me just try switching it on and off. Okay, is this better?
It's just coming on now. Yes, better.
Okay, so those are nuances that one has to deal with, but that's the investment, that's the journey that you have to go through, because at the end of the road, again, the profit pools, not just the demand for credit, but I think genuinely the profit pools available are quite attractive, and we tend to feel, at least I personally tend to feel that we are at the sweet spot. We have the ability to take more risks than a bank would, as well as being a rural focused, or our birth was as a rural housing finance company, whereas most housing finance companies are born urban and want to expand into the interior geographies. So that gives us some cultural advantages in terms of experiences, relationships with customers, etc., which are difficult to replicate.
Right. Plus the fact that you belong to a large and well-trusted group in India, right? The Mahindra Group, homegrown sort of large group, which also has roots in all parts of rural India via its tractors and various other things that they do. Might also help you build that network of trust, isn't
By
it?
virtue of having the Mahindra name, some amount of implicit trust comes along with it, right?
Right.
And please understand, we give our average ticket size in rural housing is about 1.5 lakh, right? So a customer is mortgaging his house, which invariably will be his most precious asset that he will own in his lifetime, probably worth 4 or 5 lakhs. And more than the economic value of that asset is the emotional attachment to that asset, because the home always has a lot of memories, emotions attached with it. And we know how ruthless money lenders can be, especially when they have security, right? So we always have the ability to evict the customer from his house in case he doesn't repay our loan. But to what extent do we empathize with him, partner with him in his challenging times, even at the cost of higher NPA for us? Are we able to manage our operations in a manner where, while we will be profitable, we will not be too punitive, especially to situational defaulters. And the one thing I've seen is people who are situationally in a problem, these guys don't have sufficient cash flows to, let us say, come out of NPA at one go, right? So they will say, okay, I will keep paying you as and when I have additional cash flow, I will pay you something extra. But maybe a 5-year loan translates into a 5.5-year loan, because the additional 6 months are what he needs to come out of NPA and regularize by the time he closes his loan. But that's something that you should be willing to live with, right? And those are some of the nuances that we've learned. And now we've reached a stage in our journey, which is where Waymo came in, where we felt that we have the basic building blocks in place. Now the real potential to expand, grow the network was going to be through an emphasis not so much on the process of lending, mortgage creation, etc., but about how do I give more volume of business into the hands of my team, right? So most of our business hitherto has been self-sourced, where employees go to the field, conduct gram sabhas, loan melas, etc., and make customers aware that they are eligible for a home loan, and thereby through references get a lot of leads. But now that we know that we've kind of perfected the system, and some challenging areas that we have or some mistakes that we've made are being corrected. For the next stage of growth, how do we partner with other agencies, let's say lead aggregators, right? And today, I am probably the only housing financier in rural India who would say I would love for more competition in my space. I would love 20 other HFCs to say we want to expand into a similar geography because there is so much demand, right? Today that demand is not being catered to. Maybe if we make the first move, we can create an ecosystem where that demand can also be aggregated, right? And partnering with fintechs, partnering with other organizations, partnering with the larger Mahindra group itself can be a huge source of leads for us. And we needed a system by which those leads can be aggregated and the decision on those leads be communicated to the partner. And that's frankly where we said we needed a lead management solution, and Waymo turned out to be our preferred choice.
Perfect. I think that's a great sort of transition point to the next part of my conversation. So, which was to narrow down on the actual salesperson's sort of journey and how that's sort of going to be transformed with Waymo. So, can we start by trying to understand, for a frontline person on the ground in rural India, the priorities when you want to provide them a transformed experience which will sort of drive productivity? So if you can just help us understand, because the context in rural can be very different, what is a typical process of sales and how do you want to sort of transform that over the next few years?
Sure. So for a typical salesperson, maybe once or twice a week, there would be, and this I'm talking about the rural housing vertical. We also have a separate vertical, which is affordable housing, which will be slightly more organized. But in rural housing, typically, like I was saying, once or twice a week, the employee there is a village, I wouldn't say fair, but the village bazaar, right? Where people from 5-6 surrounding villages will come to a central location and, sell their wares. That is a great place to do marketing, leafleting activities, set up camp, with banners, and just educate people that you are available, eligible for home loans. And you just get customer contact details, share your mobile number, and that is your source of leads. Those leads earlier were being captured in notebooks, right? And thereafter, during the week, going and meeting those customers, explaining to them the documentation requirement, and starting to prepare a file with KYC, X, Y, Z. And once the employee was reasonably sure that this is a file that I'll be able to disburse because bulk of the documentation is there, the income is there, etc., that is when it would start getting logged into our system. And then once it is logged in, we are able to track the file progress internally, right? But even thereafter, there is a lot of back and forth between the credit and the sales team, and the entire process is very physical. You collect a document from the customer, give it to the credit team, puts it in the file, goes through the sanction process, takes whatever approvals are there. Approving authority might put some additional conditions, and the entire process therefore became very physical. In what we see, and this was more driven by our desire to partner and tie up with external agencies who would demand some visibility into a file that they've given us or a lead that they've given us, right? What we are moving towards is we've given all our salespeople a lead management solution, wherein any lead, this village bazaar, customer says, I'm interested, at least a lead is logged in with the customer's contact number, right? If he's collecting more documents, all those documents, digital copies of those documents can be just photographed and flow to the credit team without the physical documents necessarily flowing to him. We hope down the line that even the queries coming from the credit team back to the salesperson can flow through Waymo. So the Waymo, the app, which we've internally christened LeadX. So express form of delivering leads and providing resolution or converting leads, frankly, is what we hope this entire solution enables the salesperson. And even as this physical process is transformed into a more digital one, it will also enable us to go out as business leaders to go out and do sourcing or lead partnerships, right? And provide that additional source of leads also to our employees so that his productivity can grow.
Right.
And it is not just limited by his ability to conduct bazaar activity or loan melas, etc. But me as an organization is also enabling him to improve his productivity by doing partnerships that we do, right? Like I said, maybe within the internal Mahindra ecosystem or outside. And therefore, the app becomes his one-stop shop through which the activity that he's doing on a daily basis, the leads that he has, the leads that he's converted, getting leads from a central ecosystem, even measuring the effectiveness of marketing activities, etc. All that is now kind of available through a digital workflow. Perfect.
And also the visibility that managers and leaders could get will be transformed now because of the fact that, like you mentioned earlier, if they were sort of jotting down their leads in notebooks, etc. So, so you don't have real-time sort of dashboard of visibility, which can then help you identify where you need to prioritize your time, and so on, right? So the whole visibility, which then gives control. Yeah.
Absolutely. But at the same time, I think digitization within an organization which used to be so physical in terms of its processes is also a cultural change, right?
Yeah.
And the teams internally who've been used to doing business or sourcing in a certain way, getting them to change is not easy. Convincing them about the advantages of doing it has posed challenges, and from whatever I hear, it has posed challenges to other organizations, even those who operate in urban contexts, right?
Yes.
Explaining this to a rural employee base, right? And our employees come from the same segment of population as our customers, is that much more challenging, because you have to convince them and you have to earn their trust that this is not a policing solution, but this is an enabling solution which will improve their productivity, etc. And it, as far as I'm concerned, it's still work in process within our organization.
Yeah, and I was going to come to that, but I think we can sort of take it up now, which is that, so in major part, all of these transformation initiatives are people management, cultural management processes, and that is where it can get stuck. And that is where I think a lot of effort has to happen. And what you said sort of resonates with what we have heard from other leaders as well, which is that you have all the plans in place, but you need to make the people on the ground realize that this is of value to them and that they're leveraging it to the best extent possible. First, if you could sort of help us understand, and also because I think a lot of the people listening in are also in stages of this journey where they're considering if they need to bring about more digitization in their prospecting lending process. So they will be curious to learn about what are the objectives or the targets for success that you have in mind as you look at sort of transforming your operations. What are some of the major metrics? Some of the longer term sort of indicators, plus, in a more practical manner, what is it that you're looking to solve in the shorter term, which can give you a sense that you're going in the right direction? So the metrics for success.
So if I were to look at just one metric, right, and I don't want to muddle the issue, the simple metric is how do I improve employee productivity, right? Okay. Number of files disbursed per employee, sourced per employee.
Okay.
You can figure out sanction per employee, amount disbursed per employee, but it's basically around improving productivity, right? For any organization, improved productivity should usually translate into improved profits, right? It's a direct kind of correlation. It also helps, because improved productivity also leads to improved incentives for the employee, right? and therefore his desire to stay on with the organization, suggest improvements, all of this improves. So we are not doing digitization for the heck of digitization or because others are doing it. We believe this solution that we have is something which will drive employee productivity, and the onus is not just on the employee himself to use it, but also on managers to use and demonstrate the potential, as well as for leaders like me, because once we say that it is now my responsibility to find corporate level sourcing partnerships, be it with microfinance institutions, internal Mahindra Group, how do I get more leads into the hands of my employees so that they can in turn convert them and do more business, right? It's a metric that I have also taken on as something which is my KRI, right? So all this is enabled because of digitization. So the metric, as you asked, is productivity. Just laying out the metric and clarifying it, I don't think happens, because along with it comes the culture change, mindset change associated with the transformation. Within my 5 years in this organization, I've realized that if we are a large organization, we have about 10,000 employees, right? So if an initiative is seen as something which is driven by head office, it is always looked at something which is more of a policing requirement, right? And therefore the buy-in of the team, is not high. Okay. Whereas organically sourced ideas, scaled up, have always found more traction. And just like we say, between rural consumers and lenders, there needs to be trust. Between employees and corporate office also, there needs to be trust, that you understand my problem, I'll understand yours. So the way we went about developing this solution was, the idea or the concept behind it was something which head office felt was needed. But designing the process and even saying what fields we should mandate, what fields we should not mandate, giving sufficient flexibility, even in terms of design, our regional teams were involved. And therefore, because they were involved right from the design stage of the solution, they were better able to answer queries from the field staff as to why is this needed. The answer was not because head office has asked us to do it, but they said, this is needed because I asked for this solution and I got it, and I think it is beneficial for me for X, Y, Z, right? And I think that's been a key learning for us. How do you involve the regional or the field teams in sufficient numbers to make sure that there is buy-in, so that it is not seen as something which is purely being driven as a corporate requirement. And we'll have to find the balance. Some things will have to be driven down, but to the extent possible, if it can be organically adopted, I think it's much better, for all stakeholders.
And I think that's a truly unique approach of a very bottom-up and participative, community-wise sort of ownership of the project, right? So that everybody feels that they are part of it. So I think that is something for people who are listening to sort of take away for sure, because we do have a question on very similar lines from one of the people in the audience, asking how do you tackle the adoption issue? Because with any new solution, so there are going to be challenges with immediate adoption, which sort of goes back to what we were talking about in terms of educating the teams as to the benefit of it. I think partly because the teams were themselves part of the process of solutioning, they will be more inclined to use it. But the question goes, are there any incentives given for Waymo usage, anything else that concretely is done so that they can sort of take it for their organizations to sort of replicate, is the question.
No, so this is work in process, right? We launched Waymo sometime in September, right? And it's been only a couple of months. As of now, we are still pushing to get all our field force to download the app. Okay, so convincing them that downloading the app and doing entry in the app itself, has taken us 2-3 months. Okay, what we call as usage is, when the lead gets converted to a login, that is when we will actually have employees see the benefit of it, right? And a lot of the benefits will come in the longer run as we are able to do more sourcing partnerships, etc. But we want to get to a stage where an employee takes every lead to login, and every login which is happening in my core system is something which is replicated in my lead management system, right? So if I can say that happens, I think that itself will probably take us another 3-4 months to get to a stage where Waymo or LeadX conversions of leads will kind of equal the number of fresh business which is logged into my lead origination system. As of now, we are not giving incentives, but we are looking at other metrics by which we say, for example, should we consider giving incentives only on lead conversion, which happens through LeadX or Waymo, right? Okay. So an employee has to take the customer through the LeadX journey, or he has to go through that journey before he becomes eligible for incentives. But I think it's too early. I would still want to give it, a month or so of more organic adoption, convincing, explaining to seniors, and maybe 1 level down, 2 levels down, etc. And if it still doesn't work, then we'll start having some incentives, because these incentives will also be a little more punitive, because you lose the incentive for using something also means there is a disincentive for not having used it, right? Is the way it will get translated. So I'm still hoping that there is more organic adoption and we don't have to use incentives, because the productivity benefit is there, for employees to see. So I would rather take a bill through legislature, as you will, and have sufficient debate than to introduce an ordinance.
Yeah, perfect. Or it's better to use a carrot than a stick.
Absolutely.
More dumber language. But I think one thing that we didn't touch upon was the whole COVID situation of the last 2 years, and how has that impacted your organization and the operations, and what has been some of the unique sort of challenges that you've faced there? I mean, if you can sort of touch upon that, because so that must be something that is playing in the back of all of our minds as we sort of look ahead. So has there been a fundamental change over the last 2 years in the way you go about the lending process post-COVID?
So I think more than the lending process, COVID has brought about a change in our collections process. I think we really embarked on our digitization journey more from a collection standpoint in March 2020, where until that time we were probably not even enabled for UPI, right? And today about 20% of our collections happens through UPI modes, right? So that was the trigger when you realized that you could not go out in the field, an organization which otherwise was almost 80% cash collections on the field. Suddenly movement was restricted, so you had to think on your feet and figure out a way to ensure that there was collections happening. The regulator did give moratorium, etc., but all of that comes at a cost, right? Even for the consumer. So our digitization journey, I believe, started with collections, like I said, during COVID, and it's all for the better, because today we have an increasing share of our collections happening through what we call as non-field modes, not necessarily digital. So we are also doing collections partnerships where a customer, if it is convenient for him, can go to a nearby location and deposit cash rather than having necessarily to pay money digitally or through banking channels, because the rural economy is a cash economy. So you have to tailor your processes to that effect. We are in fact the first ones who partnered with India Post Payment Bank, and postmen across the country are able to collect cash from our customers and provide instantaneous confirmation to them that your money has been received, etc., etc.
Right.
So we've done a lot more of the collections and collections, partnerships, and digitization. I think as far as sourcing was concerned, we realized that these partnerships, if in collections, can help us improve our processes and productivity. We should be able to do something similar on the sourcing side, which is why the first step was introducing the Waymo LeadX solution. But I think there's a lot more work that we have to do internally to digitize our lending process. It has to also do with the loan origination system and the loan management system, and to what extent we can integrate third-party solutions with those solutions, with those kind of legacy softwares that we have. So we are doing a more holistic relook on the lending process as well. But yeah, I think COVID was a welcome impetus for especially for our collections digitization roadmap.
Okay. On that note, I think as just a small plug, that Waymo does have a sort of leading collection solution as well, so we can talk about that later. Yeah. So on the lending side, I think you mentioned about the fact that, so this is just the first step, and a lot more needs to be done. So if I were to ask you to paint a picture of what an ideal solution would look like, and what are the various sort of additional things that you can digitize over the next few years, so what would your sort of goal or vision be in terms of digitization for the next 2-3 years, at least?
So I think currently we've thought about digitization or productivity improvement from the perspective of the sales team, right? And what tools can you give him so that let us say the KYC that he does is simplified. He doesn't have to fill out an application form. He doesn't have to sign too many agreements, etc. But the next journey, next phase will also be about improving productivity of other teams, right? Credit team, for example. What tools can you give them so that verifications can be digitized, third-party agencies with which their credit decision is faster, more knowledgeable. Technical teams which go out and take property photographs. How do you enable them to work remotely, or whatever work they're doing seamlessly flows into the core system? The risk management team, for example, right? Things around risk triggers, RCU, FCU. What are the basis on which they will trigger additional verifications, etc. And can all of those be system driven rather than analyzing historical data and trying to form hypotheses? So a lot of that will have to be around data, so that productivity of these teams, maybe even the accounts or the disbursement team, right? To what extent can their roles be simplified using digitization, not from a perspective of wanting to reduce manpower. That is one other, I think, misnomer or misconception, that digitization will lead to, there is a concern around job security. But basically the same resource can do higher order stuff, right? Because the day-to-day mundane stuff, or something which can be a formula, or something which an Excel sheet can do, or a system can do, ideally should not be done by the human brain. And so can the human resource potential of the organization really be leveraged for taking critical decisions where there is some element of subjectivity involved, and all the objectively clear decisions are kind of delegated to a machine, basically.
Perfect.
So that's it's a little difficult to do, because in rural India the data points available might be lesser than urban context, and therefore finding those data sources, again, with whom to partner so that you get those data points so that you can take a more intelligent decision, are kind of other things that those departments are thinking about improving their own productivity.
And what might be some of these additional data points? Just so curious, because in urban India you might look at somebody's credit score or so on. What is the data that you can look at in rural India? So if it's somebody who is not part of the traditional lending space sort of prior to this, so what are the signals that go in to the data analysis?
So let's just take an example. Let's take a farmer, right?
Okay.
So historical mandi prices of a certain crop in a certain district in a certain month. What are the yields? What are the input costs? What are the
Got it.
pricing that he will get at a mandi? How volatile is it? And therefore, on a more scientific basis, what is the price of that crop that you should assume as steady state for the next 5, 7, 10 years, so that you are able to estimate his income and income volatility, a little more scientifically. Just an example.
Okay, perfect. Makes sense now. Awesome. So we have some more questions coming in from people in the audience. One is around the informal lenders. So it's a question from Vivek asking, is there any conflict that you face with the informal lenders and the intermediaries? So I think this is more of a human dynamic sort of question than digital transformation, but it is interesting. I think we should take it. So do they see sort of institutions like yourself as a direct threat, or is there scope for coexistence? Is the question.
So while we serve a customer base, we don't serve everyone, right? There will be customers that we reject as well for reasons. Let us say the customer doesn't want to use the money for housing construction, right? He has some other personal loan use. I cannot give him a loan, right? I mean, we will do it only for customers who've taken a home loan with us and demonstrated good repayment behavior, and thereafter we might consider giving that person a PL. But PL is a segment that we don't participate in. Even secured lending, the speed of response that we have will always be lower than, let us say, the local money lender to whom you can let's say mortgage your gold, or you can figure out a solution for getting instant credit, which is not possible in an institutional kind of mechanism. So I don't think there is a conflict in the sense that we are creating rural housing finance as an industry. Just like HDFC created urban housing finance and gave all the salaried individuals in the 80s and the 90s the confidence that they could get a home loan. We would like to give that confidence specifically in housing finance to rural consumers, right? There will be other credit requirements which others can play, but I don't think the local money lender is a local rural home financing, right? So to that extent, I don't see a conflict between us and them. And like I said, at least from my perspective in rural housing, the more lenders there are, the merrier it is, because it is genuinely, I don't think as a housing finance company with an 8,000 crore balance sheet, I don't think we're even serving 2% of the country's rural housing finance requirements.
Right. So the opportunity is huge, right? And the sort of potential is significant. Yeah. So I think we almost reached the end of time. I think so for the last 2 minutes or so, if you can just sort of walk through your pieces of advice for people listening in who are sort of embarking on sort of digitization journey in NBFCs, based on your experience, what should they be focusing on? I mean, if you can just summarize and give them 2-3 things that they should be on top of their mind, because there's a lot of information out there which can sort of clutter their minds up. So what should they be focusing on? Yeah, just some piece of advice for you before we wrap up, Shantanu.
Sure. The first thing, be very clear about why you're undertaking the large-scale digitization journey. There might be a lot of internal experiments which keep happening when you're trying to do some incremental improvement, but when you're trying to do large-scale digitization, the output metric, like you said, needs to be very clear, and the need for that output metric or that digitization should be very clearly defined.
Right.
There are a lot of technologies available today which are very sexy and nice to have, and everyone wants to say that I use AI, ML, etc. But whether you actually need to use AI, ML in your process, or whether your document-based credit appraisal suffices given your customer base is something which every person has to decide on their own. The second advice would be involve as many people early on in the decision-making process as possible, at least the key stakeholders across departments which will be impacted, right? So something that the sales team does will impact, let us say, credit or document flow, etc. So involving them early on in the process and kind of co-creating the solution rather than imposing a solution and then saying we need to change it because it doesn't suffice the requirements of your team. And the third, which I think will remain paramount, is figure out, have patience, both with your consumers and your teams, and try to create mechanisms by which you are able to earn their trust, right? Rather than kind of have a divide between head office and regional offices or field teams. I feel the field will work that much better, or the human resources will be that much more productive if there is buy-in at the last line or the last level about what head office is doing is keeping me in mind and not some other vested interests in mind for reasons that I don't understand. So regular communication, etc. And that's another thing that thanks to COVID, we have all these digital platforms available where you can interact. Even if you can't travel, you can interact with large employee bases. So all that is being done with the underlying desire to earn the trust of the broader team.
Yeah, that's fantastic. Thank you so much, Shantanu, for this last 1 hour with us.
Thank you. Thanks for having me.
I also thoroughly enjoyed the conversation. And I think a lot of very concrete sort of things to take away for the people listening in. And I was looking forward to engaging with you again. And thanks again for joining. And thank you to all the listeners who joined as well.